Hello traders, and thank you for tuning in to XNS's Market Outlook. In this special edition of the Market Outlook, we're looking at the latest sell-off in markets this week and discussing some of the reasons behind that, as well as what traders should be aware of in the upcoming week of events in markets. I'm Michael Stark, Financial Content Manager, and joining me to give us insights is Stanislav Bernikov, Trading Specialist. Welcome, Stan, and thank you very much for being here.
Hello, Michael. Thank you for having me today.
So the first question, I think, is what are some of the instruments that have been affected by the sell-off on Monday, and what are the instruments that have gained? Can you give us an overall summary of what's been happening?
Well, everything against American dollar was the subject for the sell-off. So everything was moving down. Nasdaq 4.5% drop, S&P around 3%, I think, maybe similar. Bitcoin more than 10%. It was a very rough sell-off for crypto markets. So pretty much everything was moving down, including gold, by the way, which usually is a protection. And so we had just American dollar moving up and probably some currency pairs. Well, that's it.
Mm-hmm. And what do you think are some of the main narratives, or the one main narrative that's driving that, whether it's inflation or monetary policy or something else?
Yeah, so investors were trying to discount the 75 basis point hike on the upcoming meeting of Federal Reserve. Previously, there was a probability of a 50-step hike, but now it's probably 75. So some of them are waiting on the new information, which we have on inflation, the CPI, and the markets were terrified about that. And we see that the probabilities of the hawkish scenario for not June but July meeting, they're already skyrocketing, they're moving up. On Friday. On Monday, probably we'll have the new data and the probabilities will be even greater. So this is the same old narrative, inflation and interest rates. So this is it. That's what actually makes markets drop on Monday.
Mm-hmm. Looking ahead then to the Fed's meeting, which is on Wednesday night, what effect do you think that's going to have? Do you think they're going to try to calm the market down a little bit, or do you think they're going to add some fuel to the fire, possibly?
Well, previously, every time when the Federal Reserve was publishing the interest rate and Jay Powell was holding a speech, we had the so-called Powell effect. So if you take a look at what I'm showing you right now, you see that every time S&P 500 index was moving up, actually, at least for the short term. So it seems that the press conference of Jay Powell has the effect of calming markets down, at least for a while. The last time it was like 3 days, I believe, no more. But previously in January there was quite notable pullback, and in March there was a 3 weeks pullback. So I will not exclude the probability of the expanding of the some good pullback. So traders often forget about that, but when we have this press conference, so usually that's a bullish sign for the market. So I will be very cautious with shorts. Emotionally, that's understandable. Probably people want to get rid of stocks and cryptocurrencies. But if you see this Powell effect evolving and happening in the market, that might be actually the good long opportunity, at least for the short term.
In summary, we've seen a significant sell-off for gold, many indices, and Bitcoin, while the US dollar has risen. And the key narrative that's driving that is monetary policy, and that's a knock-on effect from inflation, with participants in markets starting to price in a 0.75% hike by the Fed to some degree. And this week, the key event to watch is, of course, the Federal Reserve's meeting. And particularly, it's possible that there might be a pullback upwards if Jerome Powell, as is historically common, tries to calm the markets down somewhat. So thanks very much, Stan, for joining us and for giving us your valuable insights.
Thank you, Michael. Have a good trading week, everyone.